Welcome back. You're watching The Money Show, and it's time to get your portfolio queries answered. And before we get on to our viewer queries, let's also flash our WhatsApp number, email ID, where you can send across your questions. And remember to send us all the details, the current investment details, and where you want to invest, or even the first step towards your investment journey that you want to take and need help from our experts, advice from our experts. You've got to just WhatsApp the question, or you can email us your queries also. But then let's begin, and let's welcome Anil Rego on the show today, who will be talking to our viewers and will be doing the life financial planning. Thank you so much, Anil, for being on the show. And we've got good questions. With good, I mean investors are really aware of the kind of time horizon they want to invest for, the kind of goal they are looking, or which is aligned with their investments. Most of them have also picked up the best funds in the category. So let's begin, and let's take Gautam's question. He's from Mumbai, and he said that I would like to invest 1 CR for next 5 years, and he wants you to suggest funds through which he can invest this amount, and also the right way to invest. So congratulations, Gautam. You considered mutual funds a route to invest in equity, and the approach cannot be very risky. Anil, what do you say? Because it's just 5 years, and the amount is 1 CR. Also, how he should be investing in one go, or how should he be staggering it, also really matters. And definitely, I don't think he can take much risk with this amount because of the time duration.
Yeah, definitely. 5 year is a good time where you can sort of invest into equity, but it is, really not a very long period, because you may see volatility. Let's just say, in case you have a situation where, at the end of the fourth year, say markets take a dip, right? So you have to be a little cautious. If the need is, say, a very real and important need and cannot be postponed, then, a little bit before you come towards the 5 years, then you should move all your funds into debt funds. That's it and done. Considering that if you want to deploy, say, a crore, what I would suggest is to do it in a bit of a staggered way. And staggering can happen, through what we call a systematic transfer plans, where we initially will deposit all the money into respective, ultra short-term funds or liquid funds of the same fund house, but then it goes off into the final equity fund or the fund that you would like. Okay. In fact, one of the things I would also like to bring in to his portfolio is he could also look at possibly, let's say a gold ETF. So what is the recommendation that I have? Maybe 10 lakhs goes off into, let's say, an SBI gold fund, through SIPs, or stagger it over a period of time. I think staggering over, 6 months may be good for gold, considering that it is already run up. Okay. The second is second level of the conservative side. Maybe use a HDFC Balance Advantage Fund. One can invest 20 lakhs. This one can even do lump sum. So, and upfront you can invest, because automatically the Balance Advantage Fund manages risk well. So 20 lakhs lump sum one time can be invested into HDFC Balance Advantage Fund. Motilal Oswal large and mid cap, you can invest another 30 lakhs. And you can first put it off into an ultra short term fund of Motilal Oswal, and possibly over 6 months systematic transfers, so that 30 lakhs moves into Motilal Oswal large and mid cap fund. HDFC small cap similarly, put it into an ultra short term of HDFC, and then you can move it. Here you can even look at a slightly longer period if you want to play safer. Anywhere between 6 months or 9 months, you can end up doing a systematic transfer. You can do a weekly systematic transfer, okay, over this period of time. So now the other part is, would you like to keep any liquidity? If you would like to keep liquidity, then one time you can put money into, say, ICICI Proof floating rate fund, or maybe even a short-term, income fund. You can end up, investing into. But if you are not looking for liquidity in between, which I would think so, then you just put this 10 lakhs also into the HDFC Balance Advantage Fund. So we are having it, which is a little bit risk managed. In that case, HDFC Balance Advantage will be 30 lakhs rupees. So totally 1 crore. a combination of lump sum and systematic transfers.
All right, so let's also recap the funds also. I think you've already suggested him the kind of strategy he should be having. So a balanced approach, ICICI Pru Balance Advantage, HDFC Balance Advantage, Kotak Equity Hybrid and Nippon India Multicap can be the strategy. All right, Anil, let's take other question. This is from Ramaswamy Jairam. And he wants you to review his portfolio. Accumulated amount is 1.2 lakhs, time horizon 15 to 17 years. Motilal Oswal Mid Cap, Quant Small Cap, Motilal Oswal Micro Cap, Parag Parikh Flexi Cap, ICICI Value Fund, ICICI Pru India Opportunity Fund. And all right, so that's the portfolio, and 15 to 17 years, a lot of time maybe. I think that's the best part about his investments, right? A good time horizon.
Right. It's a pretty good time horizon,
Yeah.
and I think today investors also are, choosing their funds reasonably well. So, what are the funds that I think he can exit and sort of reinvest? I would look at exiting maybe the Quant Small Cap, uh, the Motilal Oswal Micro Cap, as well as the ICICI India Opportunities Fund. Okay, and ideally, what one would like to do is possibly, bring it back into, say, ICICI large cap. One can invest into Motilal Oswal mid cap, Nippon India small cap, Parag Parikh flexi cap, and also have a value-oriented fund like ICICI Value Fund. So I would, have distributed across these five funds.
Okay, so let's move on and let's take Kanan's question. He's from Pondicherry. He says that he's 45 years old and he has a daughter who's in the 6th standard, and he needs the amount for her further education and higher studies. A suitable fund for a period of 10 to 15 years can invest 5,000 and he can take risk, is also what he said. And he also specifically wants you to suggest him a small cap fund.
Yeah, so normally, one doesn't suggest a small cap fund for a need like a child's education, okay, because high risk. But however, say if you want to sort of respect that, okay, I would still come back and suggest maybe a couple of funds, a combination of say a mid cap like a HDFC mid cap opportunities fund and a small cap like a Nippon India Opportunities Fund. Okay, so assuming a 14% long-term return, considering both are, let's say, mid and small cap, okay, he should be sort of able to achieve his goal.
All right, I think with that, let's wrap up on the show as well. Thank you so much, Anil, for joining us today and helping our viewers strategize their investment portfolios. Thank you. And with that, it's a wrap on the show as well. But I'm going to leave you with our WhatsApp number and email ID, and you can send across your questions. Thank you so much for watching. Bye.